Welcome back to Metals, Money, and Markets Weekly. Cinco de Mayo, May 5th, 2017. With me, as always, Mickey Fulp, the Mercenary Geologist, and for miningclips.com, I'm Rob Goodman. Well, Mickey, not a whole lot going on this week geopolitically. Le Pen election, the French election with Le Pen actually battling back could be something interesting to watch. And on the home front here, maybe the first step in a longer process, but the potential repeal of Obamacare. So I don't know what that had to do with the markets, but I know on the metal side, it certainly wasn't a pretty week.
Well, it was not a pretty week for all the commodities. I'm going to editorialize a bit here and say Cinco de Mayo is a made up American event that does not exist in Mexico. So the Americans have seemed to adopt that as something they think is Mexican Independence Day, and it is not. So, with that said, the metals had a very bad week. All commodities did, led by oil. Iron ore also down severely this week. Gold went below its 200-day moving average, closed at 1229 for a 3% loss, down 3 weeks in a row. Silver, even worse, down 5% to close at 1632. We haven't seen below $17 silver since mid-January. Platinum down 3.4% to 912. And palladium, which has been on quite the run up, and it's still high, lost 1.5% to close at 814. Meanwhile, copper had yet another bad week as inventories are up and the Chinese PMI data was neutral and no better, closed at 252, down 2.5% for the week.
I concur on your analysis with Cinco de Mayo, but nevertheless, my favorite made-up holiday. Heading on to energy, oil, the real story here, had a brutal week. Rallied up today a little bit, but still a bad week.
Oh, a really bad week for oil. Fell to below $44 yesterday, and that is as low as it was before the OPEC agreement nearly 6 months ago to cut production. It rallied very nicely today, closed at 46.38, but still down almost 6%. Uranium, I'm not even sure why we keep mentioning it, but it is down now for 8 weeks in a row, closed at 22.50, down a quarter.
Jumping back to oil, what's your analysis of the weakness in oil, obviously off 3 weeks in a row?
Well, rigs are up once again. It's 16 weeks in a row that oil rigs drilling in the U.S. are up. U.S. production is way up, led by shale oil, of course, but also deep Gulf oil is starting to come back on. And then the worries over OPEC, they meet, in 3 weeks, and the market's already worrying that they won't continue these production cuts. But the real reason that all this is happening in the commodities market, in my opinion, is that hedge funds are en masse abandoning commodities. And we know that hedge funds operate in groupthink mentality, and they move in and out, and all of a sudden they moved out of commodities.
And shifting to currencies, dollar off 4 weeks in a row, the euro up 4 weeks in a row, and the loonie really having a tough time of it. Was below, I believe, 73 yesterday.
Well, Trump's done a good job with his bully pulpit about he wants a weaker dollar. Dollar closed at 98.55, down 0.5%. But let's put this in perspective. Not much more than 2.5 years ago, we were looking at a dollar index of 80, so it's still relatively high. Euro, with the idea that Macron is going to be the president of France, was very bullish for the euro. It hit 110. It's been quite some time since we've seen that level, up over 1%. And finally, the loonie was in free fall yesterday, went below 73 cents, rallied a bit today, closed at 0.732, basically flat for the week. But that level of the loonie yesterday was 18-month-old low.
On the market side, all new highs for the U.S. indexes. Good jobs report, I guess, is mostly to.
Well, a good jobs report this morning was part of it, but probably the bigger part was that as oil rallied, the energy stocks came back with a vengeance. So we ended up today with all-time highs for the Dow, the S&P 500, and NASDAQ. Not a lot of gain on the first two. Dow closed at 21,007, 0.3% gain. S&P 500 pushing 2,400, closed just below that at 23.99, and finally Nasdaq, led by Apple, which closed at 6101, up almost 1%. Needless to say, an all-time high.
With all that pressure on oil and the loonie, as imagined, the venture had a rough week.
Yeah, the venture 3 weeks in a row of rough times. It fell in conjunction with gold below its 200-day moving average. So this doesn't look good going forward. Once again, on very low volumes. I went back and looked at a piece we published a couple of months ago on the seasonality of the Toronto Venture Exchange. It's not unusual. In fact, it's often the norm in, not especially in raging bull markets, but in the markets overall, to see this seasonal decline in the Toronto Venture Exchange from mid-April to mid-May. Closed at 782, down over 3% for the week. I think our real concern here is it's breached the 200-day moving average. Well, if we can get through May, then June usually looks, or at least the first half of June, usually looks pretty good.
Okay, Mickey. Look forward to talking to you next week, and keep our eye on the news wire, see how the French election went.
That's going to be a biggie if Le Pen pulls the upset, and we have seen two of these populist upsets. The markets are going to roil next week, and I think gold will go on a tear. So we'll just have to see what happens on Sunday.